it's not just me, but a lot of people say that, say, in the next 10 or 15 years, if you have an expectation that you're going to get more than 3 to 5% a year from the S&P 500, I would like to take the other side of the bet on that with you. So I think the odds that the S&P delivers over 5% returns a year for the next 10 or 15 years approximates zero. This is why I was asking and saying at the beginning that, the Magnificent Five or the Magnificent Seven, tell me those cash flows. Just run an exercise on your own. Look at the value of the businesses. If NVIDIA is valued at 3 or 3.5 trillion, sorry, not billion, trillion, the cash flows need to be in the range of 2 or 3 or 400 billion in a relatively short period, because as I go further out in the years, then I have to discount it.
Yep.
So when is NVIDIA going to deliver a year, single year, 500 billion cash flow? Okay, 700 billion cash flow. Because if I'm putting out 3.5 trillion, let's say I have a family fortune of 10 trillion and I buy the whole of NVIDIA, 3.5 trillion. If I'm putting out 3.5 trillion, I want 7, 8 trillion out of it, right? I want to double my money in a few years. How am I going to get 7, 8 trillion? The only way I get 7, 8 trillion is somehow there's like that much in cash flows that comes in the next 15, 20 years, discounted back, which means the cash flows need to be like 15 trillion or something. To get my 7 trillion,
Yep.
I need 15 trillion in cash flow. Show me how they're coming and which year, what cash flows are coming. And I just think that the math on that is hard. I mean, to me, it just goes into a too hard pile. So Warren Buffett increasing his cash position, he's publicly stated that he thinks that the corporate tax rates are at a record low rate right now. One of the reasons he's given for reducing the stakes is to basically realize the gain while tax rates are low. But I think he clearly understands that this 3 to 5% is not lost on him. Between us girls, it's not going to be 5%. It's going to be less than 3%.